Good morning and welcome to the VSA Morning Miner. It's Monday, the 19th of May, and I'm joined by Paul Rankin. Paul, how are you today?
I'm pretty well, thank you. How are you?
Yep, all good, thanks. I'll be doing the podcast for most of this week as Andrew is in New York at a conference. Um, let's start with Panthera Resources, though, as they have had their they've submitted their memorial, which includes the statement of claim. That was the end of last week and being published to the market this morning. So that statement of claim, the company will be claiming for damages of 1.58 billion US dollars. For the expropriation of the Bukia asset in India. We've talked a lot about the background before. Our valuation was done on a relative basis using publicly available data, and the midpoint using EV per ounce values implied $450 million to Panthera, but with a top end of the range at 1.05 billion. So this some way higher than the top end of our expectation range, but obviously the company has the benefit of being able to value this using their own internal estimates, offer a mine plan and engineering type data from having a full resource model available to them. That also means that they can sort of infer the royalty value which arose from the subsequent auction of the asset after it was expropriated. The winning bid for that was $60 million upfront payment, $60 million in performance guarantees, and then a 65% mineral share, which sounds incredibly high, but it is possible to make assets work on that basis. If you looked at Centamin, that's probably a good example of a 50-50 JV with a government getting a free carry, and Bukia of similar size. These are both entirely valid ways of valuing the asset, and we won't know which way the court will decide to value it until the outcome of the case. But it does show that this is a high value asset with potential for hundreds of millions
Good
in
summary.
claims against still a very small market cap.
Very good, very good.
So the next step, which could take some time, is India's response. So we'll have an update in due course and a video out later today. Paul, in more normal news, we've got updates from Tharisa and metals exploration.
Yes, that's right. Tharisa, the dual quoted PGMs and chrome producer in South Africa, first half trading statement, and they are required to make this announcement to the JSE under regulatory rules if they expect some kind of a material change of more than 20% from the prior period. Well, they do in this particular case, and that is they tipped back in early April that they were having operational difficulties with the weather as well as other issues. And this statement is saying that the financial statements will show materially down earnings and revenues over the first half period. They expect a decrease of around 75 to 80% in their basic earnings per share to something between 2 and 3 US cents. And that would mean that headline earnings are also down a similar amount to also between 2 and 3 cents a share uh, for the 6 months ended the 31st of March 2025. Now, we would hope that this is a temporary phenomenon and not something which is going to affect ongoing production rates in H2, but we'll hope for some kind of a clarity on that in their follow on announcements in coming weeks. We also had full year results released by the Philippines gold producer and Nicaragua mine developer, metals exploration. They had the processing plant there operating above the design capacity with throughput at 2.15 million tons, which was just slightly higher than 2023. But the BIOX circuit had the better operational performance with almost 84% uh, uh, efficiency, and it improved the carbon and leach recovery to almost 93%, which is very high for gold deposits of any kind, never mind BIOX assisted carbon and leach. So we had gold production at overall recoveries of 90.5%, which was up by roughly 2.5 percentage points. And the rising gold price gave them a $2,300 average price on their total sales, which came in at $191 million US, leaving them with an operating profit of 53.5 million. And that simply shows that they also have benefited both from improved recoveries and improved throughput, but also a substantially better gold price. So, well prepared going into this new performance year with plant operations there in the Philippines working right up there where they're supposed to, according to design parameters. And they do have that Nicaragua mine at La India now in construction, as they had announced a couple of weeks ago.
Yeah, and obviously the gold price was only sort of low $2,000 per ounce by for much of this year. So H1 2025 likely to be even stronger. The share price performance for metals exploration has obviously been very strong. So following that um, price performance, but the free cash flow generated there is incredibly impressive. Anything else, Paul?
Just real briefly to say that Anglo Asian Mining has announced that they have opened the Gilar underground mine on their Gedebek project copper gold mine there. It is an underground mine, but of about 2.75 million tons of reserves, and it's about 7 kilometers from the existing operating plant. So it produces or providing more production and increased operating flexibility for them.
Very good. All right. Thanks, Paul. We'll be back tomorrow.
Very good. See you tomorrow.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.